We'll also be chatting with Mr. Keki Mistry, Vice Chairman and CEO at HDFC, and would be imperative to know from them as to what led to the kind of NII growth as well as the margin support that they've seen at about 4%. And Mr. Mistry, hi, morning. Give us the highlights. What's actually aided the NII growth for you?
So let's talk of the loan book to start with. We saw 16% growth in our loan book on an AUM basis on the individual loans, and a 17% growth on non-individual loans, and aggregate growth of 16%. We saw that post demonetization for the first couple of months there was a bit of a slowdown, particularly the months of November and December, but post January onwards, or from January onwards, every month saw a faster and faster increase. So January, the new applications that we received, and I'm talking only of new applications, I'm not talking of loan disbursements or loan approvals, only new applications. January was 21% higher than December. February was 16% higher than January, and March was 44% increase over February. So new business, obviously, in my view, this is probably the best time to buy a property. Property prices have not increased in recent years, and because property prices have not increased, effectively there has been a time correction of prices. Secondly, interest rates are at a significant low. I don't think since 2008 interest rates have been as low as they are now. And thirdly, the huge incentive that the government has provided to people to buy a house now through the CLSS subsidy scheme which the government has announced, I think it's a massive benefit that people get. So I think all in all, it's a great time to buy a house. Going forward, we would expect that the demand for housing will continue to remain strong from the individual segment as long as these favorable factors continue.
Okay. Keki, what is your view on NPAs? Have they stabilized? What's your outlook there?
See, individual loans are a lot more predictable in terms of asset quality. Our gross non-performing loan from individuals is 61 basis points. So if we look at our NPL number in March, our gross non-performing loan number is 79 basis points. If we break that 79 between individuals and non-individuals, individual non-performing loan is 61 basis points, and non-individual non-performing loan number stands at 1.16%. My sense is that as far as the individual book is concerned, we've seen nothing today which would give us or make us worry about asset quality going forward. Non-individual loans are always very lumpy loans, and therefore whilst we have adequate security or more than adequate security, there is always that theoretical possibility of some loans slipping into NPL in some quarter. But other than that, we don't see, and frankly for us, touch wood, asset quality has never been a cause of worry all these 35 odd years.
Okay, fair point. Your Q3 AUM's growth, that stood at 15%. Mr. Mistry, would you say that this is sustainable? Share some expenses or rather experiences from FY18. Where do you think that this is actually going to head?
See, we never make forward statements because that's not, but historically we've always believed that a 15% plus growth is something that we would expect to see for a long period of time. But 15% is prior to selling loans. So it depends on the quantum of loans that we sell. For example, in this quarter, we have sold loans in aggregate to the aggregate of 5,625 crores of rupees. And in the last 12 months, we have sold loans aggregating to 16,027 crores. So if we sell more loans, obviously the on-balance sheet growth would be lower.
Well, what are the changes in product mix which are expected by you? And you mentioned that demand has come back in the lease rental discounting loans this year.
See, again, these are all large, lumpy kind of loans. So there is no clarity on what that number would look like 4 quarters from now. But if you look at the year that has gone by without making any forward statements, the last 3 or 4 years, we had seen that the non-individual segment was growing at a much lower pace than the individual segment. This year that has reversed, and the non-individual segment has grown very nicely. So whilst if you look at on an AUM basis, individual loans have increased by 16%, non-individual loans have increased by 17%, giving an aggregate increase of 16%. The growth in the non-individual segment has largely come in lease rental discounting, corporate loans and construction finance loans, though they've grown, have grown at a slightly lower pace.
So what's your view on ticket sizes, Mr. Mistry? With the government so much focusing on affordable housing, would you have any plans to reduce ticket sizes and enter that segment?
See, we would certainly be looking at the segment that you are talking about, which is smaller size loans. In that aim, we have set up a product called HDFC Reach, where we give loans with smaller size loans. But our average loan size on a all India basis today for new loans we given in the current year stands at 25 lakhs and 60,000 rupees, which is actually a little lower than what it was a quarter ago. So a quarter ago it was 25 lakhs 70,000. This year has been 25 lakh and 60,000. So the average loan size has come down slightly compared to what it used to be. But that has been made up by higher volumes.
Okay, now update or what is the update on the performance of HDFC Life subsidiary? When should we actually expect the merger?
So they had the board meeting yesterday and the performance has been very good. The margin numbers have looked very strong. But these are all now in public domain. I think there has been a release that they've done yesterday. But talking of the merger with Max Life, it is really awaiting regulatory approval. Our lawyers are confident that the structure that they have suggested is something which is perfectly valid, perfectly legal. So we are going ahead with that structure. IRDA, we understand from reports, has sought a view from the Attorney General and is awaiting that view. So frankly, we have no update on that, but we hope that in the near future that approval